This is episode 66, and today we're talking about raising money for your business. What's up, guys? Thank you for tuning in. Today we're talking about how to raise money. When you're starting a business, you need money. How do you go about getting the money? Well, we're going to talk about that in this video. So we're going to talk about all the different ways to raise money for new businesses. But I will say, over the last couple of years, I have become more of an advocate for buying businesses. I think there's an enormous opportunity for buying businesses. I have many videos about buying businesses, entrepreneurship through acquisition. There's a lot of videos I have about buying businesses. But this video is going to talk about raising money for new businesses, or if you have a business already, how you can raise money for your business if it's already in existence. But the first thing we want to talk about is one that I've become increasingly more an advocate for, is crowdfunding. I've become very, bullish, for lack of a word, on crowdfunding. I think crowdfunding is an easy way that individuals are raising money from, strangers from all over the world. And I think you can do that as well. You can go to Kickstarter or Indiegogo. Those are some of the main platforms to raise money. And you can do that. I mean, there are people who are raising money and selling out, raising their maximum in less than a day, and that can be you. I would suggest you go on those platforms and start studying, doing some homework. Okay, what are the people that are raising a lot of money, what are they doing? And then you start realizing some trends. You start realizing that some of these people have very professional videos. They are good at telling stories about their products. They have high images, and start taking some notes and trends of it, and then you can do that as well. I mean, they're no better than you. If they can do it, you're at least smarter than at least one of those people that are raising money, so you can do it as well. And also with crowdfunding as a whole, the United States under the Obama administration passed the Jobs Act, and under the Jobs Act, they're allowing individuals to raise money. Not necessarily, you don't have to necessarily go through Kickstarter or go through Indiegogo. I know with Kickstarter, Indiegogo, you have to pay those. You have to pay those platforms maybe like 5 to 10% of all the money you raise. So, which is fine. I mean, you're using their platform, you get access to their entire audience. So you got to break them off a little bit. But the crowdfunding, with that, you can raise money from just anyone. I think it's up to $1 million you can raise up to. It's a little bit over $1 million you can raise up to, and not be considered in violation of the SEC, the Securities and Exchange Commission. This is in the U.S. So those are some of the big opportunities I see with crowdfunding. I think individuals who want to start a business, at least having a product, or whether it's a movie, whether it's whatever product or movie you're trying to raise, I start looking at it and start studying, start taking notes on those, and start seeing the trends that are actually getting funded and with their projects, and you can be the next big thing as well. So I think that's an enormous opportunity. Another opportunity to raise money is family and friends. I mean, oftentimes when individuals starting businesses, they don't have any money, but their family and friends may have some money that they can raise money from. I mean, you look at Facebook, his parents gave him some money. Mark Zuckerberg, same with Elon Musk, same with Jeff Bezos. Their family gave them money to start businesses. With Warren Buffett, when he started up his big initial fund, his family and friends gave him money to invest. So that's a normal thing to do, your family and friends. But maybe if you come from lower income background, your family and friends may not have any money, and that's fine. But you may not be able to raise a lot of money, but you can raise some money. But that's a strategy. I'm not saying it is the only strategy. Another strategy, crowdfunding is another strategy you can take. Also, you can maybe potentially reach out to what they call convertible debt. Let me back up a little bit. If you don't have any friends with money, then it's time for you to potentially start changing your network. I mean, I've been hearing this all my life. They've been saying, show me your friends, not show you your future. I'm not saying give up your friends, but you can expand your friends network. You can start going to different places and start networking. You can start networking with higher-end net worth people and start talking to them, and over time, they'll become your friends, and then they may be willing to invest into it. You can't necessarily pick your family, but you can pick your friends. And it's just fundamentally simple. If all your friends are billionaires, there's a very high chance that you'll be a billionaire. So show me your friends and I'll show you your future. I've been hearing that all my life, and I think that still applies to this day. But moving along, when it comes to convertible debt, it's another thing you can do. Let's back up a little bit. Family and friends round, it'll primarily be a loan. It'll be a promissory note. The idea is that you'll be getting a loan from them, and then you'll pay them back over time. And because they're your family and friends, you can maybe adjust that and amend that contract, something that's beneficial for the company. Convertible debt is the idea. It's a loan as well, but it has the expectation to convert into equity into your company, to convert into ownership. So the idea is start as a loan, which has its benefits because it's not an investment into your company, so your company doesn't have a valuation yet. Because if you get a convertible debt and it gets your company a low valuation, when you're trying to raise more money, they'll be like, okay, why are you trying to raise $1 million when your company a couple months ago, a year ago, was valued at $200,000? What have you done significantly to increase that valuation? So convertible debt is good because it doesn't give a company a valuation. So when you do raise that round of funding, then that debt will convert into ownership of your company, percentage of your company. So that's very important. Another thing is a round of funding. I mean, traditional venture capitalists, and it's important to know that a lot of venture capitalists they raise money. It's not their own money they're using. They go out to different pension funds, to different university foundations, to family offices, and high net worth individuals, and raise that money, and then they invest into companies like these startups, and they can be your company. You have to figure out what venture capitalists are investing into your particular industry, your particular area, and sort of reach out. Oftentimes it's very difficult to reach venture capitalists because everyone goes to them. So it's best to just try to get a referral to that venture capitalist. A lot of times they'll get referred to those people, they're willing to invest into them. So how do you go about doing that? One way is to hang around people that have gotten funding. Show me your friends, I'll show you your future. One way you can do that is to go to the different tech hubs. There's tech hubs in pretty much every major city. So if you don't live in a major city, you can go to a major city and start networking with individuals in that tech hub, in that tech hub or that startup center or whatever it may be, and try to recruit some of them people into your company. Particularly if a person has raised a lot of money, you can recruit him as a board advisor, board director, or even an employee into your company, and that person network becomes your network. So these are the things you can do to raise money that people have traditionally done to raise money, and you can do that too. And then also you do venture capital. You'll do a Series A, Series B, Series C, and it goes on and on and on. And then with time, you either sell that, because you have to have an exit strategy. You'll sell your company to another company, or you put it on the stock market. And there's a lot of ways you can do by putting your company on the stock market. I had a whole video about putting your business on the stock market, different strategies you can do. And so check that video out. But there's an enormous opportunity, and the key is that people want a return on their investment. And if you can show them how you can do a return on your investment, give them a return on their investment, then all of a sudden you have an opportunity to raise a lot of money. Because a lot of time when it comes to venture capitalists or it comes to angel investors are with a convertible debt. These are individuals who have money to invest. They may have maybe, I don't know, they may have like $200,000, and then they'll split that up, $10,000 or $15,000 into X amount of startups. If they have $200,000, they want to put in 10 startups, they'll put that amount equally amongst those different startups. And then the idea, they hope that if it's 10 of them, maybe 3 of those startups will blow up, and that can be yours. So they're playing a statistical game as well. They're playing that, okay, hopefully these 3 will cover my losses and more. And you see a lot of that in many industries. You see a lot of that in the music industry. They'll hope that one of these artists will blow up and pay for all the money they gave out to these advances of the other artists that didn't blow. You see that in a lot. You see a lot in investing in trading. They're playing the game of statistics. They're saying, okay, if I make X amount of bets, hopefully based on what these statistics say, these bets will pay off, or based on how I'm charting this chart, price action, these things will blow up. So there's a lot of opportunity, and your business can be funded. I mean, a lot of it is also cooperative economics is another thing. You see a lot of that. I mean, I know out in Africa or in Caribbean they call it susus. They're raised. That's a whole different thing. I did a video on that a long time ago. But this is not necessarily what I'm talking about now. What I'm talking about cooperative economics is you and some of your friends get together and start a business. You can get together and put a down payment on a house. You all can get together and buy some farmland. I did an invest in Africa webinar about how your money goes so far. You and your friends can get together and buy tons of acres in Africa or in the U.S. So there's a lot of opportunity that you can do with just starting a business. But I also want to mention, as I mentioned earlier, I'm more of an advocate of buying businesses. I did a lot of video on that. I mean, there's just a lot of the baby boomer generation own the majority of businesses in America, and they're getting ready to retire. Some of them have retired, and they don't have succession plans. Their children don't want to own those businesses for whatever reason. They don't want to own their business. I mean, I don't necessarily understand that, but you can get into that business and you can buy a bunch of businesses like that, and you can consolidate it. I know with the SBA, things may have changed through the pandemic, but generally speaking, a lot of banks that are giving out SBA loans, they want a 650 credit score and 10% down, and those are metrics that you can meet. and you could buy businesses and start consolidating those businesses and reduce redundancies, and then you could take your dreams and make it a reality. And you create that company, sell it as a portfolio to a larger company, or put it on the stock market. There's a lot of opportunity with starting a business or buying a business. There's a tremendous amount of opportunity. And I hope you all have enjoyed this video. That's pretty much all I have. Don't forget to like, share, and subscribe. But in this video, just to give a quick recap, we talked about different strategies for funding a business. We talked about family and friends. We talked about crowdfunding. We talked about convertible debt, venture capital. We talked about cooperative economics. We talked about different ways to actually fund businesses. And when people are starting businesses, it's like, show me the money. Well, these are the ways you can show you the money. I mean, they're not necessarily easy, but it's possible. And with enough time and persistence and determination, if it's your dream, if it's something you're passionate about, you'll make it a reality, because nothing will stop you from actualizing it. You'll reach out to people to give you the advice. You'll create a board of advisors. You'll start doing the things necessary to surround yourself around. Give yourself a mastermind group. Napoleon Hill talks about a mastermind group. Rick Ross talked about, he had a whole thing about mastermind. So get you a mastermind group of individuals that are smarter than you, and you do that. I'm a lawyer. I can serve as a legal counsel, and I know a little bit about other things. So if it's your dream, you can make it a reality. And I hope you all have enjoyed this video, and we're one step closer to 1,000 episodes. Thanks.
Do that.